Welcome to another market video. This week we saw the market full. Most of the people that were looking for the all-time high, including myself, and the market essentially did what is supposed to do. The market's single mandate is to fool most of the people most of the time, and indeed it did that last week because most of the people, including myself, were looking for the SP 500 to come up and take out this all-time high, then maybe it will do a little bit of a pullback. But instead, it just do a pullback, or some people might even talk about this as a sell-off. So the market did what it's supposed to do, which is to fool most of the people most of the time. After a strong finish in August, it started the month of September, with a lot of weakness. And if we take a look at this weekly chart here, we see that the S&P 500 gapped down on Tuesday. We had a shortened week because of the Labor Day holiday. So you can see that the market is actually down. The S&P was down 4.25%, and the worst performer was the Nasdaq 100, and we'll take a look at that a little bit later on. So all the indexes were negative for the week. And looking at the Dow Jones Industrial, the Dow Jones Industrial was down almost 3% for the week, or 1,200 points. And right now it is sitting a little bit under 3% below its all-time high here. Let me mark this off for you. And you can see that it's just about 3% and a little bit under 1,300 points from its all-time high. Also, the New York Stock Exchange Composite was down as well, and it is also 3.5% from its all-time high right now. So it's kind of pulled back from that. It's about 630 points or so from its all-time high. And for the S&P 500, since previous week it ended August, it's only about 0.3% or 18 points from its all-time high. And after last week, right now, it came down to 4.6% from its all-time high, or over 260 points from its all-time high now. So definitely there are a little bit more ground to make up in order to get back up to the all-time high territory for the S&P 500. And here, looking at the Nasdaq 100, Nasdaq 100 is actually in a correction territory because it is over 10% from its all-time high, and it is a little bit over 2,269 points away from its all-time high. And it was one of the worst performer of the week. It lost 5.89%, or 1,153 points or so for last week. And looking at this chart here of the indexes, we notice that all the indexes are below the 30-period moving average. So what I basically have here is a 30-period moving average cloud. Now, if you'd like to get a script for this Thinkorswim platform, I'm going to make this script available free for anybody that is interested in getting it. And I will put out a video in the near future to show you how to get it and where to get it and how to install it. So if you're not a subscriber of this channel, be sure to subscribe. And if you are a subscriber, make sure that you turn on that notification icon. So when I put out those videos, you will be notified and you will know that a new video has been posted by me. We are talking about all these indexes, so they are all below this green area. So if the close is above this 30-period moving average cloud, then it will be in the green. It will show green because that means the closing price, or the index is closed above the 30-period. Here you can see every one of them is below this green area here, and you can see the Nasdaq 100. See the red here, so it's negative. Russell 2000 is below, S&P 500 is below, the Dow Jones Transportation is below, so is the Dow Jones Industrial and the New York Stock Exchange Composite. So what a difference a week made. Now let's take a look at the sentiment and the internal before we dive into the some of the sector and also the the SP 500 Future, the ETF, and also the QQQ. So looking at this sentiment chart here, you can see that last week the previous week we're talking about market participant getting a little bit more complacent and also putting on some risk. And you see that last week the VIX actually came back in to this fear zone here between 20 and 30. So now the market participants are getting a little bit fearful now, and also they're getting a little bit bearish and putting on hedges into this put call ratio back above the 0.75 and 1, which I categorize it as a hedge zone. That I mean, a lot of the market participant buying put, to kind of hedge their positions. So once you get above 1, then we see that the market participant are getting bearish. They are basically loading up on put, betting on the downside. So right now, the market participant is getting a little bit fearful and starting to put on some hedge for possible more downside to come. And looking at the internal, we notice that the up-down volume ratio on Tuesday and Friday was a little bit negative here. It's a little bit over 3-1 in favor of the downside. So definitely there was some selling pressure on Tuesday and Friday. So was the market participation. We saw over 1,500 more declining issue than advancing issue for Tuesday and Friday. So we get market participation on the downside based on the daily advance decline. Now, the low upside on the New York Stock Exchange is the number of stock making new 52-week high is still holding up fairly well, although it is below this 200 level, but it's in the mid 100. Now, the downside is the little bad news is the number of stock making new 52-week low is starting to come up. So we're seeing that there were 98 stock making new 52-week low on Friday versus 145 stock make new 52-week high. So although still the number of stock making 52-week high outnumber the stock making new 52-week low on Friday was 47, but it is that number, that margin is declining, getting smaller and smaller. So that's one thing that we need to pay attention on is will the number of stock making new 52-week high come down as the number of stock making new 52-week low keep on expanding and make this turn negative. And here looking at the cumulative AD line versus the S&P 500, notice how steep the S&P 500 came down. Although the AD line came down a bit, but not as dramatically as the S&P 500. Because if we take a look at here, it came down to this level, and if we try to map it down here, so we see that the AD line is still well above this level here. Now, we're not saying that is a one-to-one correspondence to the AD line and the S&P 500, but it does give you a reference to see that the relative performance to each other, right? So in other words, although the S&P 500, have a big decline last week, but we did not see that big of a decline on the AD line. Now, looking at the NASDAQ, we notice that the up-down volume ratio is also quite negative. On Tuesday, it's almost 4-1, and on Friday, it's over 4.5-1. And the daily advance decline is also quite negative, and that illustrates how broad the market decline were for Tuesday and Friday. Like on Tuesday, there's 2,400 more declining stock than advancing stock, and over or nearly 2,200 more declining stock than advancing stock on Friday. And for the NASDAQ market, we're seeing more stock making new 52-week low than 52-week high. See that the number of stock making new 52-week low is expanding up over 200 now. On Friday, it's 230 versus there's only 110 stock making new 52-week high. So the margin on the 52-week high versus 52-week low is getting more negative. So there were 120 more stock making 52-week low than 52-week high. And we just eyeball this chart here, the NASDAQ 100 and the NASDAQ advanced decline line. you could see that this seems to be coming down, pretty dramatically along with the NASDAQ 100. And right now it's getting near this low here. So right now we're also looking at this NASDAQ 100 also getting down to this low. But again, if we look at the divergence, right, this right here and here, you notice that the divergence. So that's the thing to key on when we look at the AD line versus the index. So definitely the market participant, sentiment have changed to a little bit more fearful now, and also the internal is turned a little bit negative. But again, I do not believe that the internal is telling us that we're going to have a huge crash coming. I think we could still see a little bit more pullback before it make its way back up and try to pick out the S&P 500 all-time high. I'm not saying that the NASDAQ 100 will take out the all-time high, but certainly I think the all-time high for the S&P 500 is still on the table. Now let's go and take a look at some of the sector, and then we take a look at the price action for the S&P 500 Future and also the NASDAQ 100 Future and the respective ETF. Let's take a look at the 11th sector in the S&P 500. Here is the first 6 sector that we're looking at here right now, the technology. Notice all these sectors are below the 30 period moving average here. And we see the XLK, the technology, the XLY, consumer discretionary, the communication, and the retail, the industrial, and also the energy. They are all coming down and dipping below that 30 period moving average. And here are the remaining sector along with the S&P 500 index on a closing basis. Notice the consumer stable is above the 30 period moving average. Likewise for the healthcare sector, the utility, the real estate, and also the financial, although the financial taking a little dip here, but it is still above the 30 period moving average. And these are all defensive sector, and usually when these sectors are showing relative strength or doing well is when we are in a early phase of a recession or in a recession. So right now, definitely these sectors are warning us that we could be getting into a early phase of the recession if we are not already in a recession. And looking at some of the key industry sector here, we see the semiconductor is also below the 30 period moving average and along making a lower high. So if it come down below this level here, somewhere around 212, there's also be putting in a lower low. And you see the oil, USO, is already coming down, making lower low here. Likewise, the processors, and also the retailers. Even the biotech is showing a low sign of pulling back here and getting below the 30 period. And the mining stock is putting in lower low. And also last week we saw the banking sector, the regional bank and the big banks here, they are also below the 30 period moving average. And the home builder is also pulling back as well. Now the only one that is actually making some ground on the upside is the long-term bond, the TLT. So right now it's getting close to that 100 mark on a closing basis once again. So if I'm looking at the sector chart here, definitely, the defensive sector is telling us to be cautious on the upside, and we could see some trouble ahead for the U.S. economy. Now let's go and take a look at the price action of the S&P 500 Future ETF and also the NASDAQ 100 Future and this ETF. Now let's take a look at the E-mini S&P 500 Future, the ES. Remember last week we were talking about this balance area here and see would it be able to come back up and take out the all-time high, or if it breaks down, then we're basically looking at this balance area and get a retracement down. So you can see right now it came down and right now it's coming into this low volume zone here. So if it breaks through this low volume zone, then we'll be watching for the price to auction down to this balance area and possibly get down to this 5200 area and put in the August low to be in play. And looking at the ES market profile chart, you can see last Friday it printed a B profile, a small B profile, and that's a liquidation break profile shape. So for the coming week, we'll be watching this poor low here to see would it come down, take out this poor low, and essentially fill in this gap here and see would it come down to this 5300 level and clear out some of these unfinished business. Now, if it come down and take out this August 7th poor low, that will put this August low to be in play. And we're basically watching the 5200 area to see would it take down the 5200. And once that is taken down, then this low here will be in play. Now, if it come back up and clear these single print, then we'll be watching to see would it be able to get back into this balance area here above the 5560, 5575 area. So those are the key scenario to keep an eye on. But again, the market gonna do whatever it decide to do, and most likely it will do against what the majority of the market participant are thinking that it will do. So I'm sure a lot of market participants like myself, will have an expectation for the market to come down and try to get into this 5300 level. And who knows, right? The market could fool us again, just like it did this week, and pop back up and come back up into this area and get back above this, balance area and try to take out the all-time high. Now looking at this daily candlestick chart here for the ES, remember we're talking about this balance area and we have a 1x, 2x extension upward and the 1x extension downward. As you can see that it far exceeded that 1x extension down, filled this gap, and now it's coming down to this low volume zone, and this is the gap that we talked about earlier, and we're looking for this gap to get filled. Last week it actually closed below the weekly range here, and also it came down and closed below the September range. So that's kind of amazing. For the first week of September, it already took out its monthly range, and right now we're basically looking at the market pricing in the 5440, 5540, 5517 for the upper range. And that is essentially right up at this high volume zone here. And the lower range has got a huge range here, and it is between 5290 and 5205. So that, again, putting in this August low in play, they're coming down to this 5200 area. So right now we're basically looking at the, this particular balance area now. Remember we used that, this two balance area. Right now this balance area sort of have expanded in terms of the range, and right now it's basically separated by this low volume zone between these two balance area. So if it come down and break this low volume zone, then we are looking for a price to auction down toward this area and possibly get down to this low volume zone near 5160. So if it could get a bounce back up from this low volume zone here, get a rejection, then we probably could see it maybe try to come back up to this high volume area, this upper range. So that would be the upside scenario. But the downside scenario is for this thing to come down and tag this low volume, this low range of the weekly expected move. Looking at the SPY here, we see the SPY also came down and filled this gap, also took out that 1x extension from this balance area and closed below the weekly range there. In addition to that, it also came down and closed right at the border of the lower range for the month of September here. So right now we're basically looking for a price in pretty tight up here on the upper range. Pretty much it's 552.50 for the upper range for the coming week. Now there is a wider distribution here on the lower range, and it is between 528.30 and 523. So basically what we're going to be watching for next week is to see what we be able to get a rejection from this, LVN, this low volume zone, and push us back up and probably get a little bit of a chop in this high volume node before it push up to this upper range of the weekly expected move. And that would be the upside scenario for the SPY for the coming week. Now, if it come down and unable to get a rejection back up from this LVN, then we'll be watching for this HVN somewhere near this 529.32, and that would come into this lower range for the weekly expected move to be in play. Now, there is also another HVN down here near the 521. So we could see a little chop here and come down and a little chop here. So all these high volume zone here, we'll see would it be able to push up to another low volume zone, maybe possibly here or back up here to get a rejection back down. So that's what we're going to be watching for. The downside is come down and possibly do something like this. Then it will put this August low to be in play, because we're talking about this distribution here, and so we're going to try to fill in these low volume area here as it auctioned down. Now if it could come back up and get rejected back up, then we're basically looking at this distribution and possibly come back up here and expand this, fill up this area of volume, the distribution here. So those are the level or the scenario that we'll be watching for the SPY in the coming week. Looking at the QQQ, as you can see, it came down and filled this gap last week and also took out the weekly range. And it closed almost 2x of this balance area extension. And it came down and took out this LVN. We're going to take this out here. We're not going to use that anymore. And also, we're not going to use this extension anymore. And look at the September range. It also took out the September lower range as well. And next week, it is actually the market is pricing in for a little bit of a movement back up to this HVN, somewhere around 462.20. And the lower range is between 435.20 and 430. And once again, the QQQ is also being priced in very narrowly in the upper range, similar to the SPY here. So we'll be watching for the possibility of to see would it be able to come down to this HVN and get a bounce back up to this this HVN, basically the upper range of the weekly expected move. Now, if it doesn't get a bounce off of this 440.40, then we'd be looking for the possibility of coming down to this LVN near the 430.53 and see will we get a bounce back up. And if that doesn't hold, then the August low will be in play, and that will take it down to 424.85 or 425 area. So that would be the downside scenario, is to keep an eye on these HVN, this HVN, and also this LVN here, essentially the lower range of the expected move. And for the upside, look for this 463, pretty much the 463 area. To see what we'll be able to get back above that, then we'd be looking at this distribution to be back in play. Right now, we are looking at this distribution here, and once you get below this distribution, we'll be looking at this August low to be in play. If we take a look at the QQQ, you can see that the QQQ also came down and filled these gaps here. And right now it's coming down to this LVN. So we're going to see what it be able to get a bounce back up and come up to this HVN here near the 19,000. And if it doesn't and it continue to move down, then we'll be looking at this 18,000, this LVN here, and then this HVN at 17,500 area, and that would put the August low in play. And we look at this cash index of the SP 500. As you can see, last Friday, it closed near this 5,400 area. So for the coming week, I think these two levels will be the key level to be watching here. There's the 5,500 and close to 5,300. Now, if we could get a bounce back up, take out the 5,500, then we could be looking at the S&P 500 to try to make its way back to an all-time high. Now, not necessary for next week to make an all-time high, but anything is possible. But once you get back up to above the 5,500, then the all-time high will be back in play. Now, if it's unable to hold this 5,400 and come down and test this 5329 or 5300 area, and if it break below that 5300, then we be looking at this 5200 and the August low, and that will be in play. So those are the two key levels to keep an eye on, the 5500 and the 5300 for the S&P 500 in the coming week. If you find this video to be useful and informative, be sure to smash that thumbs up to give it a like and help promote this video on YouTube. And also, if you are new to this channel, click to subscribe to support this channel. Thank you for watching and good luck on your trading.